Hi, good morning, everybody. My name is Daisy James, and I'm the course advisor for our online and blended learning course, the MSc in Financial Management. So thank you so much for joining today's webinar. We're going to give you an insight into global trends in finance, and I'm joined with our fantastic course director, Dr. Amedeo De Cesari, who's going to give you an insight into those trends. We'll also talk to you a little bit about the Manchester Business School and why you should join us. And then we'll open the floor out to you guys to ask any questions. So I guess my role is to help and support you with your application. So I'm here and on hand to answer any questions you have about the application process. My details will be given to you at the end of this webinar, so please do feel free to ask me anything, and I will try my best to support you in the application process. So I'm going to hand you over to Amedeo, who's going to introduce himself, and then I will provide you with a bit of an insight into the business school and the University of Manchester.
Okay, good morning, everybody, and welcome to this webinar on the MSc Financial Management, and thanks for the interest in the program. So I would like to spend a few words introducing myself, so just to let you know who I am. So of course, I am the course director for this new program that we are launching here at Alliance Manchester Business School, and I've been actually working for this institution for a few years now, and I'm currently a senior lecturer in finance. I both teach and do research here at the business school, and my expertise lies in the area of corporate finance, corporate governance, with a particular focus on stock repurchases and dividend payments. These are quite core areas in corporate finance. I also do research in other areas in corporate finance, including executive compensation, M&As, and other areas. Now, in terms of the teaching staff for this program, one of the key highlights of this program is that people involved in the program in terms of delivering the activities of the program are full-time members of our faculty. So we are fully committed to this program. We have quite a lot of experience in terms of delivering blended programs. We have been delivering part of the global MBA program as an accounting and finance group for a long time, and people like Professor Arif Khurshid and Dr. Julian Jones have been involved in the global MBA program for a long time, including myself. So we have quite a lot of experience, and this program will be taught again by full-time members of our faculty, not adjunct members, which is very, very important to us. So I guess we can move on now to the main focus of this webinar. So we could please turn to the next page. Yeah, I hand over to you actually, Daisy, first of all, to introduce a little bit more our school.
Of course, thank you so much, Amedeo. So as you can see from this slide, we believe that the reason for studying at the Manchester Business School is because we believe that we produce graduates who think that a little bit differently. So we provide students with knowledge, expertise, and the ability to really excel in today's ever-changing business environment. So a little bit about the Manchester Business School. So it was established in 1965, and it was one of the UK's first two business schools. We really pride ourselves on our fantastic academics who deliver world-class research and industry-led and focused research and content. So we think that we are at the top of our game. We produce great graduates and produce great academic content. We obviously sit within Manchester University, which is ranked 6th in the world and 8th in Europe. The business school has a global network of 60,000 alumni who are based in 176 different countries, which is fantastic because you really start to build an international network which can help you grow professionally and personally. The university itself is ranked #1 most targeted UK university by graduate employers. So studying with us makes you that little bit more attractive in a really competitive environment and kind of business market that we're in at the moment. So yeah, I guess that's kind of a little bit of the statistics and a bit of the history of Manchester Business School. You can see from this slide a few more different statistics, but I'll hand you back over to Amedeo, who's going to talk to you about different global trends going on in the market at the moment.
Thanks a lot, Daisy. Yeah. So, of course, the purpose of this and the focus of this webinar is on global trends. And of course, I cannot fail to mention the current global trends, at least briefly. From an economic point of view, of course, we don't know exactly what the impact of these current global trends in terms of the epidemic will be on the whole economy and the financial markets. But of course, there will be some impact that we cannot at the moment forecast. So what I'm going to focus on primarily in this presentation is on some longer-term global trends that perhaps we understand a little bit better, that have been developing over the last 15 to 20 years. And I also want to say concerning the current disruptions that this is a blended program, so most of our activities happen online, which is of course advantageous in this context, and we're well equipped to deal with any kind of disruption that could affect us in the short term. So again, we have lots of experience concerning delivering a blended program. So, and we are currently delivering our global MBA program without excessive disruptions. So, and then I will go back then to these global trends. There are many, again, well-established global trends we can mention in finance and economics. I just picked a few because for the sake of time. So one that has been discussed quite heavily by economists is the fact that more and more firms nowadays are reluctant to become listed firms, and they often remain private firms. And there are several reasons as to why this has been happening. One reason is that firms do not need to necessarily become listed in order to raise capital. Nowadays, for instance, firms can get equity capital from private equity investors like venture capitalists or individual investors like angel investors. There are also some costs associated with being listed, maintaining a listing, but also in the first place going through the initial public offering, which can be quite costly, disruptive, and sometimes can also lead firms to lose some trade secrets that are very important. And of course, this trend has been developing, particularly in the largest market that we have been studying over the years, which is the US market, in which some people argue that there is a US listing gap. So basically, there are fewer than expected public listed firms nowadays. And we don't know whether this will actually affect other markets, but definitely it is something we need to consider. So we can move on to the next global trend, which is also very important. Okay, so the next global trend is a slightly more complex in that, again, it does not affect all the markets in the same way. It is, again, a trend that has been studied quite well in the context of the US market, perhaps less well elsewhere, but there has been a trend in recent decades towards an increasing share of trading on stock markets being carried out by institutions rather than retail investors. Nowadays, essentially, institutional investors like mutual funds, hedge funds, they seem to dominate trading in stock markets and also in the bond markets. And essentially, they've sort of displaced retail investors from this point of view, who rely more and more, and perhaps they invest through institutional investors more and more nowadays. Another important point to mention is that these institutions are becoming more and more passive in that they are not they do not attempt as much as before to pick specific investments, but they basically try to track some indices, large indices, and they try to mimic those indices. And it's not clear what the implications are of this strategy in terms of monitoring of managers and companies. The third important point I want to mention is that more and more trades are conducted by high frequency traders through some kind of algorithms. So we have basically nowadays many institutions that do proprietary trading using some kind of algorithms, and somehow their trading strategies are not anymore subjective and based on human judgment, but they're more somehow objective from this point of view. And again, it's not clear what the implications are of this. On the one hand, they add the liquidity to the market. On the other, some people argue they dominate the market and they make the market potentially more irrational. So we can move on to the next one then. Okay, the next one is slightly perhaps less well known, but again, it is a trend that is quite important in many markets, often in emerging markets where essentially the banking system, the traditional banking system, is perhaps less developed. And it is quite of a difficult trend to define, because when we talk about shadow banking, we can include different phenomena, different institutions, different transactions. Now, okay, I'm going to mention a few of them in particular, going back perhaps to the financial crisis. But basically, shadow banking has to do with lending to companies through somehow institutions that are not part of the traditional regulated depository sector. Okay, so basically, it is similar, it is akin shadow banking to traditional banking, but somehow this lending happens outside the regulatory framework, which affects depository institutions. There are many examples we can think of, and it's also the boundaries of this phenomenon are not very clear, but some of them have to do, for instance, with securitization activities, like those that happened before the financial crisis in 2007, 2008. At the time, basically banks, they wanted to lend more to different types of customers, including homeowners. And what they did, basically, they sold mortgages. In the case of mortgage lending, they sold mortgages to some special purpose vehicles. They actually created themselves, these banks, and in return they received some capital from these special purpose vehicles through somehow some issues of bonds called asset-backed securities. So this is quite a complicated transaction, but the bottom line is that through this channel, banks could actually increase lending to the financial system beyond what they could have done based on some of the constraints imposed on them by regulators. And there are other examples of this we can mention, but for the sake of time, of course, we cannot go into that. But this is quite an important trend, again, happening particularly in emerging markets nowadays. Can move on to the next one and final one. This one is even more complex than the previous one to define, because here, when we talk about fintech, essentially we talk about cutting edge innovations that affect the way in which financial transactions that traditionally have been carried out by financial institutions, maybe banks, but also central banks. Well, all of these financial transactions can nowadays be carried out in innovative ways. And we can think about, for instance, cryptocurrencies. Of course, currencies, normally they are essentially issued by governments through central banks. But nowadays we have these cryptocurrencies that are basically sort of privately owned currencies that can be bought and sold on specific markets through some rather complicated and advanced platforms. And it's not clear what the purpose of some of these currencies is and what the implications of the existence of these currencies is in the long term, but they are a thriving phenomenon at the moment. Another important point I want to mention is, again, going back to the idea that more and more trades nowadays happen automatically, in a sense. They're not anymore decided and managed by human beings, but they're somehow based on some kind of analysis of large data sets, and perhaps on artificial intelligence. The idea somehow that we can create machines that can learn, perhaps like human beings, and develop some kind of artificial intelligence. So we are moving in that direction. Of course, more and more trades are based on analysis of data in bulks and somehow in an intelligent way. Again, the implications of this are not clear. Definitely, this will increase liquidity on the stock market and other markets, but in terms of whether or not market valuations are reflect better or worse, the fair values of those assets is not entirely clear at this stage. There are definitely other fintech phenomena that are definitely positive and beneficial. For instance, we can think about peer-to-peer lending, the idea that basically we can borrow from peers. Again, we don't need to borrow as much from the financial markets, or from at least the traditional ones, or from the banking sector. We could also borrow from peers through some platforms. If we are entrepreneurs, we can raise equity and or debt through some crowdfunding platforms. And in fact, private equity investors sometimes even join these platforms, and they invest through these platforms alongside other investors. And of course, again, in many markets, mobile payment systems are very well developed, and this may actually be beneficial in that they reduce the cost of making payments, especially in those markets in which these costs are very high, because perhaps the banking system is not very competitive. These mobile payment systems can be a solution to reduce cost, and they're arguably quite beneficial to consumers. So these are just some examples, that we could go on and mention other examples and other global trends. So I guess we can now move on to the MSc itself. So how are these global trends related to this MSc? Well, we are going to touch upon throughout our MSc some of these trends, and perhaps other trends I could have mentioned during my presentation. And what is the philosophy behind this MSc? This MSc has been designed for basically people that, when they start their MSc, do not have advanced knowledge of finance. So they are perhaps an academic and or professional background that is not somehow in finance. Okay, perhaps it is related to finance to a certain extent in terms of skills, in terms of certain types of knowledge, perhaps quantitative skills. We don't need advanced quantitative skills, but we require some of them, but somehow we do not require people that start this program to have advanced knowledge of finance. The reason being that we try to start building up notions, skills, expertise in this area slowly when we start the program, and then we go into more depth as we develop through the 2-year program. So that it's very important to understand this. And so the program is suitable particularly for professionals. They want to basically either change their career track completely, or perhaps they want a career progression within the institution where they're working. When I say institution, I mean a wide range of institutions. It could be, for instance, a financial institution potentially within the financial services sector, or could also be a corporation, a multinational corporation. That would be an ideal type of institution where many of the techniques and notions that we teach in this program are extremely relevant. It's also important to understand that because of the target for this program, this is not a typical on-campus MSc program in which we try to essentially prepare students for a career outside academia, but also potentially for a career that needs some advanced research skills. Okay, this program is quite different. Here, we want people to acquire some more practical skills and more practical knowledge. So essentially, we try to, for instance, build some assignments throughout the program that allow students to tackle some practical questions that are very important, like whether or not I'm going to choose a particular investment project, whether or not my company should increase borrowing, for instance, from a bank, or maybe raise equity. It is a 2-year program. However, we are quite flexible when it comes to the length of the program, so you can finish the program within 2 years. It's a blended program, so it's very flexible. And again, we have been teaching similar programs over the long time, and we are one of the top accounting and finance groups in Europe. Another important point, another important highlight of this program is that we have a very, very extensive set of financial databases that you're going to use, of course, whenever you want. You can use them. Most of them are online. You can also use them, of course, for some of your assignments. And I can tell you that you will not find many institutions out there in the world, I would say, that have such a large, extensive set of databases, given the size and the reputation of our school. We can move on to the next one. Okay, in terms of structure, you can, of course, read a bit more online about the structure of the program, but I want to just highlight a little bit how the program is structured. So this graph just gives you an example, just gives you the structure for basically for the first year, and some of the dates for the workshops are already there, but these are just indicative dates. First of all, we have two centers, Manchester and Shanghai at the moment. We are hoping that we're going to open up other centers going forward, but these are the centers at the moment. And there are different types of units in this program, in a sense. The typical unit is a unit in which most of the activities happen online, but there is also a face-to-face workshop, either at the start, and this happens in the first term, or in the middle of each unit. The face-to-face workshop lasts for 3 days. It is very, very important, of course, as a face-to-face workshop, because basically we can interact with you better. You can interact with other students. We can address your questions much better. It is what I think a very important highlight of the program compared to programs in which there is no face-to-face interaction. The face-to-face workshop is also quite important because it allows you to work on a case study, on a practical case study with other students, and this, of course, also allows you to understand some of the techniques much better, to apply them in practice, and also more pragmatically, the assignment counts normally for 50% of your credits for that particular unit. As I say, we start quite slowly. So we start with 2 foundational units, accounting and finance, and then we go into more depth. For instance, I teach I'm the convener essentially for the corporate finance unit, and another unit that you have in term 2 is global financial markets. In this, again, we have workshops, and we also have some units that are purely online without any face-to-face workshops. For instance, we have a unit called data analysis and statistical techniques. Why do you need this unit? Well, it's very important in finance that you have some knowledge of some quantitative techniques that you can use to analyze data. These are not very advanced techniques. These are important techniques of practical relevance that it's important that you understand. And also these techniques will allow you to conduct essentially an empirical study at the end of the program, near the end of the program, within a group of students. So you will be able to basically choose a topic and do some research using some of these quantitative techniques. So we can move on to the next slide. Yeah. Okay, so again, I want to repeat some of the practical aspects of the program from an academic point of view. It is a blended program. Again, it gives you the best of both worlds, you can argue, because you have a very flexible environment, a learning environment in which you manage your own time, and most of the activities are online, but you also have a face-to-face focused, somehow very focused workshop, which is very, very important, I believe. And the workshops are either in Manchester or in Shanghai. And again, in case of disruptions, we have ways to deliver these workshops virtually. So we have the technology essentially to do so in case of disruptions, but hopefully there won't be any going forward. And in terms of a commitment, I would say that well, it depends on the speed at which you can learn, but I would say that if you spend around 15 hours per week, on average, at least on average, there will be, of course, more intensive and less intensive periods throughout the program. If you spend something like 15 hours per week, you should be able to complete the program without difficulties. It is a 2-year course, but again, we are quite flexible from that point of view. So you may be able to slow down a little bit somehow and finish later. In terms of methods of learning, we have, of course, an online platform through which most of the activities take place, but we also have online tutorials, videos, face-to-face workshops, virtual workshops, and so on. There are no exams, so basically this is based on assignments, which is quite suitable given the content of the program, because again, we want you to think about practical questions, think about them deeply. Perhaps you need to do some research around those questions. You need to come up with your solution, which should be an innovative solution, a unique solution, different from anybody else's solution. And we want basically you to think deeply about this question. We don't want you to just memorize some material. There is also a dedicated study advisor to support you on the course. So the support, again, is very, very good, and we have plenty of experience from that point of view. Okay, now in terms of career ambitions, of course, I don't want to limit your aspirations in any way. So I can say that this is a program that allows you to acquire skills that are useful in many different contexts, primarily, of course, in financial management, but even beyond. And if you think of it, some of the techniques we teach in this program are used by different types of finance professionals. They are used by financial managers when they evaluate an investment projects. They're used by sell-side analysts when they evaluate a company that perhaps they are taking public through an IPO, when they work for their investment bank. They're useful for other types of analysts. They're useful for perhaps for mutual fund managers. They want to evaluate a particular company, understand whether they should buy or sell at the current market price. So career ambitions are many, potentially coming out from this particular program. And again, this program is useful both for people that want to change their career path completely and perhaps become part somehow of the finance industry, or people that are working in corporations or other types of institutions. They want to learn more about finance, possibly for a future career progression. In terms of skills, again, the program is not focused on research skills primarily, more on practical skills and applications, real world somehow case studies that somehow are definitely useful in your future career. And it's also very important pragmatically to say that, first of all, we're a very reputable institution, which helps a lot to somehow use the program in your future career. But at the same time, we also allow you to build a network, a very important, very large network of acquaintances that can be useful professionally. We have a huge global network. We have been managing a global MBA program for many years, and our network is extremely extensive. And we have centers basically throughout the world. So our network is extremely important for you. It's a network of academics, specialists, policymakers, and other types of professionals.
Brilliant. Thank you so much, Amedeo. I hope you all found that insightful. So like I said, I'm your dedicated course advisor. So I am here to help and support you in your application. You can contact me by emailing studyonline@manchester.ac.uk with any questions that you have. We have had a few questions come through, which I am going to answer. But before I do that, I would like to just kind of highlight our next webinar, which will be on Thursday, the 2nd of April. So this is going to be a more information session on discounts, scholarships, and the application process. So that will be led by myself and our lovely admissions officer, Catherine Howard. Before the end of the webinar, I just wanted to kind of answer some questions that I've had come through. So one of the questions is, do you offer scholarships and bursaries? So the short answer is yes, we do. We offer 2 scholarships. So the first one is professional services scholarship. So this is worth £4,000, and it's for students who are working in an internationally renowned professional service. So places like KPMG, EY, Deloitte, and kind of the list is endless, I suppose. And then we have a woman in finance scholarship. So again, this is worth £4,000. And this is, to be eligible for this, is for EU and UK residents. And it's for talented women looking to progress and take that next step in kind of the financial services and their role in finance. In order to apply for these scholarships, So this requires a separate application. So it's in a form of a PowerPoint presentation, and this is a blank canvas for you to really showcase your skills and your attributes and why you think you'd be a great candidate for the program, but also for one of these scholarships. We also have an alumni bursary as well. So this is 15% of the overall fees, which I'd just like to add are 19,500. And the fees can actually be paid in instalments. So if you would like to know more about these instalments, I'm more than happy to send you a breakdown. What it is you'll pay a certain amount before each semester, and that kind of helps break up that 19,500. I've also had a question about the conferences, and I know, Amedeo, you've kind of touched on that briefly. Obviously, at the moment, the current climate is changing and changing quite quickly. As it stands, the conferences will go ahead. We will kind of talk to you and address concerns and keep you in the loop if things do change. But obviously we do provide fantastic online content, and we'll continue to do so if those workshops and conferences don't go ahead, so your academic learning will not be jeopardized. So before we leave you, I'd like to say thank you so much for taking the time out of your morning to listen to us speak, and thank you to Amedeo for providing us with a great insight into the MSc and also kind of global trends happening in the market at the moment. Amedeo, would you like to say anything before we leave?
Yeah, thanks a lot. I would like to thank you, the participants in this webinar. I hope that again, this presentation was useful for them, and hopefully I will see them very soon when they join the program. So thanks again for your attendance and your interest in the program, and thanks, Daisy, for your help with this webinar.
No problem. Thank you, everyone. And if you do have any further questions, please do not hesitate to reach out to me. I'd be more than happy to help. And hopefully we'll see you in September. Thanks, everybody.
Bye.